All right, welcome everyone to the RLT Pivot Podcast. My name is Tracy, and I'm here again with my co-host, Mr. Dan Jansen. How are you, sir?
I'm doing absolutely fantastic, and we got a good guess. Is a little bit of a lane shift from the day trading aspect of things, but as you guys do know, we love the alternative income streams and things like that. We got Marty Greenbaum in the house. Marty, how are you?
Doing great. Thanks, Dan, Tracy. Appreciate being on today. Yeah, we're going to give you a little perspective into franchising.
Yeah, absolutely. Talk to us a little bit about that. We're very familiar with the day trading, swing trading, investing side of things. There's a ton of business owners in our LT community, along with a lot of other industry professionals, things like that. What do you specifically do, and how does that kind of work?
Well, what I do, I've been in franchising 30 years, and what I do is I'm a franchise consultant, but basically I educate and I help people identify what franchises could be the right investment for them. So just help people explore it and say, hey, does this make sense? And there's a lot of things been changing lately, so more and more people are drawn to franchising. It's crazy.
Yeah.
I guess because we're a trading community and we have a lot of individuals that are making profits through trading in the stock market. And one of the things that we look for is, what do you do with that money once you start to gain it? So with franchising, what kind of value or investment is kind of the starting place where people should start considering looking at franchising as an opportunity to move their money or spend their money or purchase a franchise? What's kind of the minimum?
Well, listen, it really depends. There's retail franchises, there's service franchises, right? Okay. So, you can get into franchising for $50,000, but if you have higher goals of growing something, everybody's seen or heard of people that, they started with one location, now they got 5 or 10, right? And they're semi-absentee owners, they have managers in place, and they continue to scale. Geez, there's guys that own Great Clips hair salons and they have 50 of them, right? Or Taco Time restaurants, they have, 30 of them or 50 of them. So the thing is franchising, there's a full, spectrum of franchise investments, but, franchises, the way it's kind of designed, and not all franchises are great franchises, but there's some great investments where, if you invest 300, for example, okay, I'll give you an example. There's a smoothie type concept. You invest $350,000, but that's the initial investment. Maybe you only come out of pocket 100 and you finance typically the balance, right? Although financing is a little bit tougher because the rates are so high. But take that $100,000 investment, and that could end up generating you, if they do $1 million in business and you're netting 25%, right? So you have $100,000. Now you have an annuity netting you to $250,000 a year for a 10-year franchise agreement. Now, that's a really rough, painted picture of what it could be, but there are many franchises that net 20, 25, 30%, right? And once you get them going, not only are you drawing that income, but you have an asset that's growing in value, right? So what you find a lot of people do is they get into this, and there's, like I said, when I say franchising, people often will say McDonald's, Chick-fil-A, Dunkin' Donuts, Krispy Kreme. These are the things that people, Subway, those are the most common, brands that people think about. But keep in mind that there's franchises in fitness and senior care and pets and everything. So there's a lot of really neat ones out there, and there's a lot of great investments.
What if someone was to approach you, what do you help them with then? Do you help them find all of those different types of franchises or?
So let me share that with you.
Okay.
Thank you. There's over 3,500 franchises in the US, right? So you go online, and, there's no way for most people to judge, is this a good franchise? Is that a bad, you could look up reviews, maybe you're familiar with the brand, like Ace Handyman franchise They're, tied into kind of that Ace Hardware, right? So that's a brand you could trust, right? So there's certain people would make, some assumptions about the strength or profitability of a franchise, right? So it's a little different here. Now, every franchise has what they call a franchise disclosure document. So the Federal Trade Commission requires a franchise to put forth some information about their franchise, really detailed, pretty much everything from leadership. Have they had any litigation against them? Have they had stores that closed? But also, what's the investment breakdown? What's the franchisee's responsibilities? What's the franchisor's responsibilities? And most importantly, unit performance, right? So if you were looking into a franchise and you want to say, well, what can I expect from this? How much money can I make? Because that's like what everybody wants to know, right? People make decisions. Keep in mind, they make decisions based on two kind of sides of the brain, right? You have the intellectual side. You're looking for data. And then there's the emotional side. They want to do something they love, they're passionate about, right? So the franchises have this information. They put in, financial data. And then during your due diligence with a franchise company, you're going to talk to existing franchisees. If I was going to buy a franchise, let's say I was going to buy a Meineke Car Care Center. Well, I'd probably reach out to 3, 5, or more owners and say, hey, what's been your experience? What do you love? What do you not love? Do they live up? So there's a lot of things to know and do. Getting back to what do I do? Okay. What I do is this. I educate people about franchising and what they need to know before they buy. And I help them identify. I have a process where I help them identify, like a matchmaker, what franchises based on, their background, their skills, their abilities, their goals, what would be a good fit for them? Do they want to switch careers, or do they want to keep their career and find a semi-absentee franchise and grow something while they're still gaining an income from their primary, career? So a lot to know here, but I hope that answered your question a little bit.
Yeah, it does. Yep.
Yeah, no, I just wanted to go through some of the pros and deltas of franchising in the first place, because one, it's even though you're saying to me, and I'm sure there's different variations of owning a franchise, a lot of it, keeping your job and stuff, that could all affect the profitability of that franchise, you not being in-house, right? So there's going to be some kind of, it's not a complete passive income of put your money into I-bonds or bonds or treasuries or whatever the case, does its thing, it pays you. Obviously, the outcome of what you should be getting from a franchise should be a lot higher than that. But how much hours let's go with the least first. What's the least amount of hours that somebody really has to work or dedicate to run their franchise?
2 hours a month.
Okay.
Wow.
I know that sounds crazy. So let me qualify that. Okay. There are investor model franchises that I represent, work with, that they manage it for you. They hire the general manager. They manage the marketing. They hire the staff. If they need to get vans or a building or whatever you need, they're going to do it. And then they're going to charge you a fee for doing that. So typically, franchises, you're paying a royalty. All right. So you've heard of that. You're going to, the big thing about franchising is, you got to pay a royalty, and the royalties typically run 6 or 7% of gross sales. Okay. Now, obviously, 6 or 7% of gross ends up being quite a bit of net, depending on where your margins are, right? So the fact is you really have a partner in a franchise from that respect. You got to, but if you wanted to get involved in a franchise where you don't have the time to mess with it, but you have 2 hours a month where you could talk over key decisions, on either spending money on staff or other assets, and go through the KPIs, and so there are a number of franchises, not a big number, but a number of franchises where you could own a franchise, not have to work it day to day. And guess what? What's cool about some of those is you could pick any top market in the country, because you don't have to babysit it. So they'll allow you to open, whatever top market's available, you could open in another market, which is kind of cool. But the average semi-absentee franchise is going to take probably 10 to 20 hours a week, right? You could get by with some, and it really depends on the strength of your, like a general managers or whoever you hire, So if you're hiring you're opening up a smoothie place and you hire a manager, I mean, you still need to be there to, work with the contract, kind of coordinate the opening of the store so you'll have more time up front. And then you have to find that right person. And, if that right person leaves, you have to find another one. So yes, it's not that passive as you may want, but a lot of people, they'll invest the time up front, grow that because they're growing income and they're growing an asset or multiple assets. So, I hope I, covered that all enough for you.
Can you buy a franchise in the United States if you don't live in the United States, or is it just Americans?
Well, no, listen, a lot of people that are overseas that want to become citizens are using that purchase of a business to gain a visa. So there's, so that if you're not a U.S. citizen, you could definitely buy a franchise, but they're going to want you to come here. Now, that investor model, you could probably own from anywhere. All right. So, but most people that, buy into franchises, and most franchise companies would prefer someone who lives in the market where the franchise is open. Okay. Right. So it's very limited if you're looking to do the other.
Right.
There we go, Tracy. We found your loophole to get you over to the U.S.
to get me to the United States. Yeah, there you go. What's the advantage of, you kind of spotted on it a little bit, but why go franchise versus just looking for a business that's already successful in your area and buy it outright?
Okay, well, here's the thing. When people come to me and they say, I want to resale, and I'll say, okay, let's find something that makes sense for you, right? And something you like and something that's profitable, okay? So many of the resales you'll find, it's funny how some people come up with numbers and how they do their books. And it's like, and then trying to find the right thing. And guess what? You're getting into the business now. There are some honest people out there and you could get lucky and find that right thing. But it's kind of like a needle in a haystack, finding that right thing and being lucky, right? So they're out there, but they're tough to find. Now, on the other hand, you could get into a franchise and you could just take a brand that hasn't been in the market and start that. Now, the thing is when you open up an independent business, you have really no support. Once that other owner goes, they're gone, right? And I was speaking to someone today because she's looking at a restaurant she's considering buying that's an established restaurant. But she was concerned because if this owner leaves and she takes over and she loses half her staff, then she's like, well, what do I got? Are the numbers going to hold, right? So there's always a risk in business, right? Mm-hmm. So you could buy an existing business, but let me kind of walk you guys through the advantages of a franchise. Why would somebody do that, right? Okay. What's the value? Because we mentioned that you pay a royalty, right? So what's the value you get as a franchise owner? All right. First of all, I want you to think about this. If I decided to open up whatever franchise, it really doesn't matter, senior care, whatever, if they have 200 or 300 franchisees and they've been doing it for 10, 15, 20 years or whatever they may be doing it for, they've distilled down their model to the most profitable version of that model. Why would they do that? Because they're trying to maximize the royalty revenues. If their franchisees make more money, they make more money, right? So what's advantageous is the fact that most franchise organizations really work hard. They spend a lot of money on technology. So you have, stronger means to manage your business, manage the resources, have a better customer service or customer experience. They hire, like if you had 300 locations, your ability to hire marketing agencies that perform the digital marketing for the franchise owners. So there's like a lot of economies of scale. You've got training and support. 70% of people that get into a franchise do not get into a franchise where they had prior experience. You don't need that. They train you. They would rather train you. Okay. But aside from that, you have this highly profitable business model. You have tons of support. You could have hundreds of other franchise owners that are like part of the team. They're not competitors. They're in the same spot you are. And there's a lot of those that really have done well. You share KPIs, share best practices. So typically, franchises have a 2 to 3 times success rate than non-franchise businesses, and they cash flow quicker. They're typically more profitable.
Okay. Now I'm curious. Sorry, go ahead,
Go ahead,
Dan.
Trace.
Oh, okay. I was going to ask what kind of characteristics, because you already said that the individuals, they don't have to have any experience prior, but there's got to be some kind of personality trait that makes them more successful at being a franchise owner. What might those be?
Well, just experience in business would be, franchisors are looking for some experience in business and managing people, perhaps, some sales experience. It really depends on the franchise, right? If you're in a service franchise and you have a painting company, right? Now you're not going to be the painter. You're going to manage painters. You may not even be the salesman, but a lot of owners of service companies will go out and sell or network. So networking in the community is a good skill to have. But general business experience, and they want people that could talk, that have drive, that are positive, that could be, a good member of the family. So here's what some people don't understand about franchises. So it used to be where if you were breathing and you had the money, you could buy a franchise. Okay. Nowadays, they really, they bring you through, they all have their process to educate you and to learn about you, right? Many have, they do the personality profiles. There's so many different ones out there where, you take a test, you do some online test, and it shares with them where your strengths, where your weaknesses are, right? And so they could say, all right, who's our top performing franchisees? And how does this person match against them? And will they be successful? Franchise companies want you to be successful because if they're going to award a specific territory to you, right, they want to optimize the potential revenue and profitability from that market that they're awarding to you. Mm-hmm. So yes, again, you should have some skills, and they're going to be pretty open on what they're looking for.
Okay.
Gotcha.
And by the way,
no, go ahead.
I was just going to add, like when I work with a client to help them identify, hey, what's going to be a good fit? I'm asking all those questions. I want to know, because then I could say, all right, is this guy strong in sales or more of an operational or a systems guy, or because what I won't do is bring a franchise that I don't think that person's going to be successful with, because we have to. So I definitely ask all those questions.
Mm-hmm.
Just putting on the investing hat here for a second. Is there, or to your knowledge at least, is there any type of investment fund for franchises? So is there, like you see in there's Fundrise for real estate. There's a couple different models based around real estate, farmland, things like that. Or is there a group set up for accredited investors, anything like that, where you could invest in a fund that would manage all of these, actively manage the different franchises?
There's major organizations in franchising. All right. So I'll give you an example. So you could invest in a franchise by investing in their stock, like Exponential Fitness. Okay. Exponential Fitness owns 10 brands. Maybe you've heard of like Club Pilates, Cycle Bar. They have BFT, Rumble, Row House, Yoga 6. They have, Club Pilates and Pure Bar and AKT Dance Studios. Well, they're very well known, big company, publicly traded. There's a lot of publicly traded. And then there's groups of franchises organizations, companies that are traded. So you could look and find those type of. Now, is there a fund? I'm not aware of them at that. I'm not aware of the funds, but I would assume they'd be out there.
Yeah, it's an interesting concept because I've heard about funds for everything, but I was like, I haven't heard one just for franchise. But like you said too, I mean, there's McDonald's, there's other already franchises that are just already publicly traded. So
Right.
that might be a route to go, or ETF, I'm sure, set up at some point for it. But okay, yeah, very cool. What's some of the I would say downsides, or well, I guess what is one of the things that you would look for to stay away from a franchise? What would be some red flags in your opinion of this might not be a franchise I want to be a part of?
Well, listen, couple things. First, let's talk about their evolution. There's, where they're at in their evolution, right? So there's a lot of startup franchises, right? And the fact is you have startup, emerging, established, and legacy brands, right? So if you wanted to buy into a legacy brand, it may be hard for you to find available territory, right? So a lot of, you're looking at startups, you get, if they're a couple years old and they have 2 franchises, if you're going to pay 7% royalty, what are you getting when you have someone that really doesn't have an infrastructure to support you? Then you could be questioning, like, is this good for me? They have 2 franchises. I like their business model. They got a neat brand, but do I want to invest in somebody who really doesn't have the infrastructure to provide me value to make it worthwhile? Okay. So newer franchises, you got to be careful. Now, I mentioned they have a franchise disclosure document. Okay. If somebody doesn't report their financial data in a franchise disclosure document, how are you going to find out how much money you can make? I mean, you could talk to franchisees and get some idea, but the fact is if they're not reporting it, then it's probably not as good as you want it to be, right? It's not going to be something you're going to invest in, okay? There are some franchises that are dying industries, okay? So the fact is certain industries, like I would, stay away from, like, I'm sorry, I got some personal background in the franchise industry that I'm going to bring up, but like postal and mail centers, right? Now, UPS stores, for example, they do okay, but they only do okay during the holidays. Otherwise, look at print shops. Okay, what's happening with printing? Everything's online. So, I mean, print shops have been. So you got to know what's relevant too. What's relevant? What's and what's going to be a fad? Okay, right now there's a number of these, like the spa type of thing that used to be all massages. Well, guess what's coming out lately? You've got different saunas and light therapies and cryo and float tanks and cold plunge and contrast therapy, all these things where people go to detox, to relax, to, really, they're going to these. There's a lot of health benefits to many of these, but are they going to stand the test of time? And what happens during a recession? Okay. I mean, are people going to do these things? And that, definitely that bridges into another area is like what could be recession proof, right?
Yeah.
So
now I realize that you've already, mentioned that it's going to be person dependent. But I am curious what your thoughts are, just based on your experience, about what kind of the most successful franchise sector might be at this point coming up. Kind of a sector that hasn't quite made it yet, but is kind of the one that you'd be looking at right now.
I think healthcare.
Healthcare?
I think healthcare is really emerging in the franchise space, bigger and stronger than anything. And you don't have to be a doctor to own healthcare franchises. Okay, so I'll give you an example. There is a franchise called Ellie Mental Health, ELLIE. It was out of Minnesota. Okay, it started up, and where basically you maybe have a 2,500 square foot. Maybe there's 8 offices in this, in kind of a doctor's type of office type of scenario. You hire a lead therapist, and that lead therapist, they hire other therapists. But really, if we think about it, in the United States, the demand for mental health services is skyrocketing, right? And we've got all this crazy stuff going on. And we've had the epidemic and kids having tough time in schools, and there's drug addiction, there's, families break. I mean, we got a lot to deal with, right? Money problems and all that. So mental health, what a great idea, and this is semi-absentee. If you owned it and you're not the therapist, which most of them aren't, then what are you going to do there? You don't have to do anything. You hire a therapist, maybe you give him a little cut in the action so he's got a reason to really perform and manage the team and grow the business, right? And you could do that. And the investment's only like $200,000 to $300,000 initial investment, right? And this company, they handle all the back office stuff, right? So they're handling all the billing. And by the way, I think it was like with, Obama's era with, they made where if somebody has a mental health problem, it's covered in insurance. All right. So that's also great. And why would a therapist want to work at an Ellie and not work for himself? Because he doesn't have to mess with all the stuff. Because most therapists, they got to do billing, they got to handle all these little details, marketing, this, that, and the other, takes away from their time doing what they really like to do, and that's help people, right? Mm-hmm. So interesting. So healthcare, there's everything from physical therapy. By the way, we have an aging population, right? Seniors we have a major, the next 20 years, we have more, the senior population is going to grow exponentially. Right? So anything tied in with senior and health and like physical therapy, really strong. A lot of neat stuff happening in that arena.
And what do you think is the franchise sector that is phasing out at the moment?
Phasing out. Mm-hmm. That's a tough one. Phasing out. I think more and more people are challenged with the fitness franchises, right? Because you see a lot of them come and go. There's a lot of competition. So
yeah, it's flooded market.
I think it's a really tough market, and I think you have to be really good in that market, and only the strong will survive. Not that it's going to phase out. People have switched, by the way. Obviously, if we have a recession, everybody's going to go to the $10 a month gym, right? Because that's what they could afford. So this, $100, $149 boutique fitness, the boxing, the Pilates, the this, the that. Yeah, the rich people will be able to afford it. But the average person may say, you know what, I'll just do my best at my $10 a month gym, right? So I think that's going to change over time because there was a big push into the boutique fitness space, but I think there's been so much competition and they haven't seen the membership numbers. There's a few standouts, okay, in that space, but there's also a lot of losers in that space.